With those, Justine, so you've got two systems basically. You trade one longer-term system, and they're both trading it at the same time. And usually, the longer-term system, I'm assuming, is trading the shares, and then your shorter-term system, shorter time frame, trades both the long and the short. Does that sound right?
That's right.
Yep.
That's right.
And the instruments that you've chosen, like you mentioned, shares and then CFDs. Most of the guys on the call know what CFDs are, the contract for difference. But for those who don't, they're just a very leveraged instrument. I don't know if you want to talk about those just for a minute or two.
Yeah, I sort of describe them like, imagine going to the horse races. When you go to the horse races, you can bet inside at the TAB, which is the ASX, or you can go outside to the bookies, and they're making the same market as the TAB, maybe with slightly different odds. So the CFDs is your simulated market. They're simulating the exact same market that the ASX is, but it's simulated.
Yeah.
So you've got the same bid and ask happening with the CFD. So I could go in and buy National Australia Bank, for example, with the share, or I could buy it with the CFD, and I'd be entering it in at the same price. The only difference is that you can do things you can't do in the real market because they're a CFD. Things like they have made sectors tradable, like the financial sector, the energy sector, basically the 12 GIC sectors, the global industry classification sectors, which you can't trade on the market, but with CFDs you can trade them. They've also made, not all CFD providers, but a selection offer guaranteed stop loss orders. Because they're not the real market, they can actually allow you to exit out at a set price no matter what the market does. So for me, trading CFDs, it allows me to do things I can't do in the real market, and so I use a provider that offers these guaranteed stop loss orders. I don't place them on every trade, but there's certain trades I will definitely place them on.
Cool.
So I like that freedom of having them available, plus just the ability to set your stop losses online, being able to set stop entry orders up when the market's closed. So when I trade the US markets, I can set them up overnight time before I go to bed. So I can basically set up a stop entry order with an if done stop loss connected to it. So if the order goes through, the stop loss then activates. The shares are becoming, I mean, now with shares you can start to do a lot more of these things. Now the technology is getting better, but you know, I've been trading CFDs since 2002 now, and you couldn't do any of these things with shares back then.
Yeah.
But shares are picking up their game, and I don't know if that's because CFDs are now out there that they have to start to basically allow you to do these things. And I mean, with some providers you can trail stop losses and so on. I guess the disadvantages are you have to pay an overnight financing fee for when you hold your long positions open. But because you don't have to put up 100% of your money, I usually suggest, you know, you put up 10 to 15% of your trading account and put the rest of the money into a high yield interest account, which offsets those costs.
Yeah.
So where people come unstuck with CFDs is they've got $20,000 to trade, they put the $20,000 to the CFD provider and trade it up to $200,000, and with no trading plan, no strategy, and they wipe that $20,000 out. If you've only got $20,000 to trade, only put, you know, $2,000 or $3,000 or $4,000 over there and trade it up to $20,000.
Yeah.
If you want to trade beyond your means, then you need to bring things in like guaranteed stop loss orders where you're insuring your capital, and you know, so there's things that you can do to basically manage your risk in the market in a safe way. And that's why they've got a bad name, because people can trade well beyond their means. But if you go in with a clear strategy and defined rules and a risk management guidelines that you're going to follow, then you can trade them successfully. But being able to trade long and short's fantastic.
Yeah. Do you have any clients trading other instruments as well, like the strategies that you go through? Do they apply well to other markets?
All my strategies can be used in any trending market, and you can trade them with, you know, any kind of instrument, because they're breakout or retracement strategies. Cool. So obviously the higher the leverage of the instrument, the different risk management rules you would have to use with how you would position, size the trade and manage a stop loss. But you could trade any market around the world using my systems.
Yep.
They're interchangeable for shares or CFDs, because CFDs are, basically replicate the share market. If you were trading futures and options whilst there's a few more things that you would have to do. With options, you'd have to know what the volatility is on the day, what the delta and the gamma is, decide in the money, out of the money strategy that you're going to use, and there's a lot more things you have to think about. That's why CFDs are so wonderful. It's a no-brainer. You don't have to think about all those things anymore. Yeah. I've sort of been there, done that, and being able to manage stops on options wasn't as fun with the spreads and the market makers and so on. So the CFDs just took all that away, and you didn't have to worry about that. You know, but you'd have to have a different stop strategy with options to what you would use with shares or CFDs. So it'd be a matter of employing, you know, different risk strategies around the instruments that you're trading.
All right. And the actual trading system itself, like perhaps you can talk us a little bit through that.
Okay, so I basically have Metastock set up. That's my chosen charting package. I've been using Metastock basically since I started trading the markets full time, so it's been nearly over 10 years now. I've got a mechanical filter set up, so basically what I do is at 3:30 I've got my computer set up with the task manager, so it downloads my data, so the ASX data gets updated and downloaded at that time, and all I have to do is sit down, open up Metastock and run my scan, and I'll take you through and show you what that looks like in a moment. And once I've found a share that I like, you know, there'll be a few criteria that helps me decide. For example, maybe 5 come up in the report and I have to pick. I position size the trade, determine how many I can buy, and I go in and buy, and then I have a stop loss indicator I put on my charts. And I use a Smart Trader spreadsheet then to track and manage all the trades once they're open. So, and I'll show you some screenshots of that in a moment as well. But as I've already mentioned, I mainly trade the markets with 2 systems, both long and short. The long-term weekly system focuses on long trading, and its whole goal is to basically stay with a share until the trend ends. I could be in a trade for a few months, I could be in a trade for a few years. Over long periods of time, long-term systems have proven to be very successful. The only problem is we don't have a lot of patience to wait around at times for those results. So people become disheartened because you're not seeing things happen as quickly. And the reason for that is you're using wider stop losses, you're taking smaller positions to start out with. But you need those wider stop losses to let the trends unfold. And if you want to be in the trends for the long term, that's why you need to have wider stops. And that's what my whole goal of that system is. I'm never going to get in at the lows, I'm never going to get out the highs, I just want the chunk in the middle. So that's what my goal with that system is. And then I've got my medium-term system, which I mentioned, that trades CFDs. And I needed another system because for me, I had to leave that weekly system alone for it to perform well. So I needed something else that ran alongside that could be more active, because when I wasn't being active I was fiddling with the weekly system, and that wasn't a good thing. So you know, that medium-term system evolved over time, you know, because as I mentioned, I tried the day trading, I tried options, I tried warrants, and when CFDs came out I did the day trading with CFDs and a whole range of different strategies before settling on my medium-term system, and one that suited my lifestyle now that I'm a mum with 2 young kids. It wasn't something where I had to be sitting in front of the computer screen all day. So for example, I haven't looked at the market today, but at 3:30, you know, I pick my daughter up from school, they'll be having their afternoon tea, watching ABC Kids, and that's when Mummy has half an hour of trading. And with the US markets, usually once they're in bed and everyone's gone to, the kids are asleep, I'll then run a scan on the US markets, and if there's something that attracts me there, I will set my stop entry orders up with the if done stops, so that when I'm sleeping at night time, if a trade goes my way, the order will enter into the market and I can see in the morning how that trade has gone, and then it's just a matter of moving my stop losses and updating them as the trades move my way.